Welcome to our guide on foreign pension taxation in Romania. Taxation of foreign pensions is a topic that attracts significant interest among expatriates and foreign nationals receiving retirement income from abroad. As Romania attracts more and more retirees relocating from other countries, understanding the tax implications of foreign pensions is very important for them. This video covers the conditions for taxation and the applicable taxes on foreign pension income in Romania. Who is subject to foreign pension tax reporting? As per the provisions of the Romanian tax code currently in force, pension income obtained from abroad is subject to Romanian taxation for the following categories of persons: individuals with Romanian citizenship and who have their tax residency in Romania, and foreign individuals living in Romania and who have established their tax residency here, as per the tax law provisions. Tax residency is determined by factors like physical presence, family, and economic links. As a basic rule established by the tax legislation, an individual who is resident for tax purposes in Romania has the obligation to report all his personal income, regardless of the nature of that income of its source. As a basic rule established by the tax legislation, an individual who is resident for tax purposes in Romania has the obligation to report all his personal income, regardless of the nature of that income. These can include pensions, dividends, capital gains, rental income, income from freelancing activities, or other types. For tax residents, all the types of personal income must be declared through the annual tax return, including foreign pensions. Of course, foreigners becoming tax residents will always have this question: if my pension income is taxed abroad, do I still owe tax in Romania? The fact that a tax resident has the obligation to report an income for tax purposes does not automatically mean that the income will be double taxed in both countries. This is where the provisions of the double tax treaties come into place. Thus, in what regards taxation of pensions, most of the tax treaties signed by Romania with other countries provide that pension income received from abroad by an individual tax resident of Romania may be either exempt from taxation in the country of residency. This means that the exemption method applies. Or, the pension will be subject to income tax in the country of residency, but the value of the income tax due there can be reduced by the tax already paid in the source country. This is the double taxation avoidance through foreign tax credit method. Therefore, depending on the provisions of the applicable tax treaty signed between Romania and the source country of the pension income, avoidance of double taxation will always apply. According to the applicable legislation, pension income represents benefits received as pensions from funds established from mandatory social contributions made to a social insurance system, which may include those from voluntary pension funds, as well as those financed from the state budget. As per the provisions of Articles 100 and 101 of the Tax Code, pensions are subject to income tax as per the following rules. Pension income in excess of 2,000 Romanian lei per month is subject to income tax. The monthly taxable amount is determined as the difference between the gross income and the non-taxable threshold of 2,000 Romanian lei. The income tax applies at a rate of 10% on the taxable income, determined according to the above. Here's an example of pension taxation. Let's assume a pension derived from abroad, amounting to 4,500 Romanian lei per month. The income tax must be applied at the rate of 10% on the taxable amount that exceeds the threshold of 2,000 Romanian lei. This means an income tax of 10% out of 2,500 Romanian lei. In this case, an income tax amount of 250 Romanian lei per month will be due, totaling 3,000 Romanian lei of income tax annually. However, if the same pension income is taxed in the source country, then avoidance of double taxation will have to apply. This can be achieved by one of the methods already described. Applying double taxation avoidance involves 3 steps. First, source country taxation, assuming a 15% rate. Second, using the tax credit method to reduce Romanian tax by the source country tax. Let's say that, in the source country, the tax due on pensions is in the amount of 15%. This results in a monthly tax of 675 Romanian lei paid in the other state, meaning 8,100 Romanian lei per year. If the double tax treaty signed with the other country provides as method of avoiding double taxation the tax credit, then the taxpayer will have the right to reduce the value of the annual tax due in Romania with the amount of tax due in the source country. Because in this case the value of the tax due in that country already exceeds the value of the tax due in Romania, then the final tax due in Romania may decrease to zero. Currently, pension incomes in Romania are not subject to health insurance contribution or social contributions. Only income tax applies, as the health insurance contribution for pensions has been repealed. Therefore, the only tax due at this moment is the income tax of 10%, as already described. This simplifies the tax reporting obligations for pensioners. To fulfill tax reporting obligations, each individual must prepare and submit the annual tax return. The deadline for submitting the annual tax return is May 25th of the year, following the one in which the pension income was generated. For example, for any pension derived during 2024, the deadline for filing the annual tax return is the 25th of May, 2025. Key takeaways include the requirement to declare foreign pension income, the importance of annual reporting by May 25, and the potential for double taxation avoidance through treaties. Always seek professional advice for specific tax situations. If you found this video helpful, don't forget to like, subscribe, and share it with your network. Leave any questions you have in the comments below, and we'll see you in the next video.